Hey, what's up, Colorado Realtors? I'm Scott Peterson. Thank you for joining me for another edition of Legal Bites. Here we are. It is mid-February, and I've been derelict. I'm going to admit it. I've been derelict in generating Legal Bites. I'm starting to get some complaints from our members saying, hey, where are these things? I need your Legal Bites because they help me fall asleep at night. I'm sure that's exactly what happens, but I do hope everybody had a fantastic Valentine's Day. All you lovely, sweet realtors out there. And because I waited a little bit, and I've been busy, I've been doing a lot of the 4-hour update courses over the last 6 or so weeks. And but because I waited a little bit, it did give me time to watch our marketplace and realtors around the state start to digest the new 2022 contracts and forms and updates that occurred January 1st. So now I've had a few weeks and I've been able to take hotline calls and hear from members and answer questions in classes related to some of the things that are kind of confusing people, and it's given me some things to talk about. So my idea is, hey, I'm going to do a little series here, and I don't know how many are going to be here. There's going to be at least probably 5 or 6 in this 2022 new contract series, different episodes. The first one I'm going to do is on loan deadlines and the changes that were made to the contract to buy and sell with regard to paragraph 5, paragraph 5.2 specifically, related to new loan terms and new loan availability. So you guys will remember for many, many years it has been the loan conditions deadline was all of paragraph 5.2. It wasn't bifurcated. At the beginning of this year, January 1st, in the new contract, we've essentially bifurcated the loan terms from the loan availability. So before, availability, which is really the lender's approval or underwriting of the loan, of the buyer for the loan and the property for the purposes of the loan, that underwriting process was the loan availability. And that was tied in the exact same clause, the exact same date or deadline to the loan terms and the buyer's sole subjective consideration of their loan terms. That's the payments, the costs, the interest rate, any of the loan terms that would be applicable in that situation. Well, those two concepts have been bifurcated in the new contract, and it's created a little bit of confusion, a lot of questions certainly, and I'll put it this way. If you're a seller or listing broker, you probably really like this. If you're a buyer or buyer's agent, you may be a little bit cooler on this modification. But let me make sure that everybody understands kind of how these ought to be used. I'm going to go backwards, I think, in explaining this because I think it's a little bit easier. New loan availability, that deadline is, again, the underwriting process, the lender's consideration of the buyer and the property for qualification on the of the new loan that has been the buyer's made application on. New loan availability, or 5.2.2, that date or deadline is probably going to be very similar to what your loan conditions deadline of years past has always been. Probably going to be the buyer's last contingency in the contract, and it's probably going to be, I don't know, 5, 7, maybe 3 days prior to closing. But whatever you were setting your old loan deadlines at is probably going to remain your new loan availability deadline, because the lender needs to go through the underwriting process in order to qualify the property and the buyer for the loan. So that's going to be the same. No change there in all likelihood. Now, if you would like, as a buyer presumably, to replicate the old contract, and not essentially bifurcate these two terms, you could write an offer that would line new loan terms deadline up with new loan availability, in which case you've replicated last year's contract and the contract for many years previously. No changes, nothing to really think about there. The problem with that, though, is, and one of the reasons for this change is that buyers have, in the past, in my view, and I think in the market's view as well, used the sole subjective consideration of the loan terms and their ability to terminate, in some cases, in not great faith, right? And literally, based on the subjective nature of the consideration of a buyer's consideration of their new loan terms, they could wake up, a week before closing, still with their loan deadline available, and say, even though nothing's changed with my monthly mortgage payment based on the new loan, I don't feel so comfortable with it anymore. I want out, right? And they'd send over a termination based on loan conditions or based on loan terms and get out of the contract, get their earnest money back, and that put the seller in a really precarious spot. In many cases, sellers that have their own contract now for the house that they were going to buy and move into, and here they receive a very late termination based on the subjective consideration of the loan. That's the new loan terms deadline. So now that those have been bifurcated, if I'm a seller, I am very much inclined, or if you're a listing realtor working with the seller, to point out to the seller that they can really back up that new loan terms contingency pretty significantly in the contract. I think it fits nicely with some of the TRID changes that were made under federal law for lenders. I don't know, probably 7, 8 years ago now, those TRID changes came into play. And now a lender is required to provide to a buyer a loan estimate document. And that's supposed to come within three days of a buyer making a loan application. The lender is required to provide a LE document or a loan estimate document. And that loan estimate document is supposed to describe very specifically all of the terms, the loan terms, that the lender is offering to the buyer subject to the loan's ultimate availability. But between the loan estimate and the CD document, the closing disclosure document that is generated essentially as the loan settlement document at the end of the transaction, those terms really aren't supposed to change very much by the lender. And so in my view, a buyer or a seller could expect or anticipate or counter an offer that requires the buyer to have their loan application deadline, and then with, call it, I don't know, 4, 5, maybe 7 days after the loan application deadline, the buyer should have, under federal law, been able to receive a loan estimate from the lender that spells out very specifically all of their loan terms. The buyer ought to have a couple of days, therefore, to subjectively consider those loan terms, the rate, the payments, the cost of the loan, any of the loan terms, spend a couple of days considering those, and allow then their new loan terms deadline or contingency under 5.2.1 to expire. And that would still leave them with the 5.2.2 loan availability deadline that would be the lender's objective approval or underwriting of the property and the buyer for the loan. And if that became not available, then the buyer would still have their contingency and ability to get out of the contract much, much later based on the loan's availability, but they would have given up their subjective consideration of the loan terms much, much earlier in the transaction. If I'm a seller, that feels a lot more reasonable and fair and gives me a lot more security. So the takeaway from this, if you're a seller, you're probably going to give the buyer the same new loan availability deadline because the lender has to go through the underwriting process. They've got their work to do, and that always is going to take the same amount of time. But the loan terms, you might well demand or counter or at least counteroffer to the buyer for their consideration that they back up new loan terms, I believe somewhere in that 5 to 7 days after new loan availability deadline is an appropriate way to give the buyer the opportunity to get the loan estimate, spend a couple of days considering their loan terms and their subjective consideration of that, and if they're good, they're in. If they're not, terminate the contract based on loan terms and get their earnest money back and allow the seller to move on and find a buyer that is ready to move forward with a transaction. So that's my thinking. I know that it will force some additional potential negotiation between the buyer and the seller with regard to that loan terms deadline, but I think that's probably a good thing. You, as a Colorado realtor who pays attention to stuff like this, just need to be prepared if you're working with the buyer to negotiate and explain that to them, and if you're working with the seller to negotiate and explain that to them. And the parties are going to end up resolving this, you're going to end up resolving it with the other broker based on the instruction of the parties and what happens to work for both of them. So hopefully that helps. As always, if you have additional questions about this, Car Legal Hotline is a great resource that's available from 9 to 12 and 1 to 4 Monday through Friday. Always love to hear from you there, and if you're having specific deal questions as those two dates or deadlines relate to your contracts or your offers, give us a holler and we'll try and talk you through those. All right, guys, we will see you on the next edition of Legal Bites, which is going to be another section in our series of 2022 contract changes. Take care, guys. We'll see you soon.